Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings. Today, we're diving into a report that's a bit like a high-yield bond itself, potentially rewarding but definitely carrying some risk. Get ready for a global high-yield bond portfolio decoder, where international debts meet investor dreams, but maybe a few nightmares too. Our spotlight is on the Western Asset Variable Global High Yield Bond Portfolio, specifically taking a look at its annual report, which pretty much sums up how it fared from January to December. First, let's talk about costs because nobody likes surprises on their bill. If you had $10,000 invested in the Class I shares, it would have cost you $84 during the past year. Now, for Class II shares, you'd be looking at $110 in expenses. So basically, for every $10,000 invested, that's what they would have taken in expenses. Seems small, but make sure to keep this in mind when judging performance. So how did the fund actually do? Well, for Class I shares, they saw a return of 7.06%. Meanwhile, Class II shares weren't far behind, clocking in at 6.70%. These numbers tell us how much the investments grew for every share that investors owned. To give some perspective, they compare their performance to a benchmark. They usually check against the Bloomberg Global High Yield Index, which actually did better, boasting a return of 10.71% for the same period. So even though the fund made money, it didn't quite keep up with the overall market. Digging in a bit, some of the decisions that boosted the fund included picking the right bonds in areas like government bonds, transportation, and insurance. Investing in collateralized loan obligations, which are basically bundles of loans, also helped. Plus, they were smart about avoiding some of the riskier bonds, which paid off. On the flip side, where did they stumble? Choosing bonds in communications, consumer products, and capital goods sectors didn't go so well. Also, not investing enough in the really risky stuff that surprisingly did well hurt their returns, along with some missteps in predicting how currencies would move. They did use some financial tools such as forward foreign currency contracts and futures contracts to manage currency risk. It seems those moves added a little extra to the win column. How has a $10,000 investment fared over the last 10 years? Keep in mind that past performance doesn't mean it's going to keep doing that. In 2014, if you put in 10 grand into Class I shares, you would have roughly 14 grand by December of this year. Class II shares would have grown to about the same ballpark too. On average, over the last decade, Class I shares have grown 3.71% each year. If you were to measure Class II shares, it would be 3.45% a year. The total net assets of the fund amount to over $153 million, spread across 332 different investments. The management gobbled a total management fee of about $1 million. Where's all the money? Most of it is in corporate bonds and notes, a little over 70%. Government or sovereign bonds come in next, making up about 17%. The next big slice goes to asset-backed securities, almost 5%. Now, things are always changing in a company. This past March, there were some management team changes. The named portfolio management team now consists of Michael C. Buchanan, Ryan Cohen, Ian R. Edmonds, Walter E. Kilcullen, Christopher F. Kilpatrick, and Mark Hughes. Transitioning into the important stuff, especially when it comes to making sure everything's on the up and up, there's Robert Abeles Jr. The Board of Trustees trusts that Robert has the skills to call himself a financial expert. How much did they pay the auditors, the people who check their homework, in 2024? About $147,000 was spent to make sure the annual financial statements were in order. They also got some extra advice and help on their taxes, which totaled about $30,000 for the year. Before they go spending on audits, the people in charge on the audit committee have to approve the audit stuff along with other permitted services to be double sure that they will not compromise anything. To keep things extra honest, they've also got a code of ethics that everyone from the top boss down to the accountants has to follow. Scrolling all the way down here, we get to see the big picture, but really it's the details that matter. There's a massive list of holdings, so I'll just randomly pick something. Here we have Ocean Trails, CLO Limited. As you can see, they're all very complicated. Looking at the assets, we can see they have unrealized appreciation from the foreign currency contracts. This is just a fancy term that means they are making money on their currency investments. On the liability side, here we have the management fee. I always keep an eye on these things. In the operations, this year shows a positive almost $10 million profit. These things fluctuate wildly for most companies, so don't read too much into it in isolation. All in all, this portfolio seems to be chugging along like a reliable, if not super exciting, train. It's got some solid wins in picking the right bonds and managing risks, but it's also faced a few bumps, especially with keeping up with the overall high-yield market and making some sector-specific choices. Looking ahead, there are some things to keep an eye on. First, the change in management team. Sometimes a fresh perspective can be great, but it always introduces a bit of uncertainty. Also, that high management fee might raise eyebrows for some, especially since the fund didn't outperform its benchmark. It'll be important to see how they adjust their strategies and whether those management tweaks will lead to better returns. Despite these challenges, this portfolio seems to be holding its own. The fund is treading somewhat stable waters with the potential for smoother sailing if they can fine-tune a few things. But remember, investing always comes with risk, so do your homework and consider talking to a financial advisor before making any big moves. Thanks for watching, and don't forget to hit that like button, drop your thoughts in the comments, and subscribe for more deep dives into the corporate world.